LLC owners, congratulations, you are making money. I bet you're now wondering how to pay yourself. In this video, I am going to break it down for you so you can understand the various requirements to be able to pay yourself and keep yourself out of a tax slinky. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. As an LLC owner, you can pay yourself one of two ways. You can either take a draw or you can take a salary as an LLC owner. But when is it that you should consider doing either or? In the very beginning, as an LLC owner, especially if you are a single member LLC, you should take a draw. What exactly is a draw? A draw is where you are just going to take money out of your business by a check or transfer payable to you. No, you're not going to pay your personal expenses out of your business account. You're going to actually make sure that your money moves from your business directly to your account. When you take a draw, I am going to recommend that you take a draw on a schedule. Does it have to be on a schedule? No, but I'm going to recommend that it's on a schedule. And the reason why I'm going to recommend it be on a schedule is because when you are operating a business, it's important that you start doing certain things on certain days of the week and dates of the month so that your business can be ran very professionally and very organized and not haphazardly. Then you also are going to get yourself into the habit of paying yourself a certain amount systematically that will ultimately convert to a systematic salary. So allow me to give an example. When you're first starting out as a single member LLC, maybe you can afford to give yourself a $500 draw once a week or once a month or every 2 weeks. However you decide to do it, try your best to do it at the same time every single week or month or whatever that day is going to be. So you get into a habit. One of the things that I like to adopt as a business owner is I will pay bills one week, payroll the next week. Look at your actual draw as a payroll to yourself. When you pay yourself that money, it is just going directly to you as the business owner. So it's very important that you understand exactly what a draw is. A salary is different from a draw. A salary is where you're actually going to put yourself on payroll with a paycheck as though it was when you work for an employer 9 to 5. When you put yourself on a payroll with the paycheck, you might be wondering, does it have to be the same amount every time? Does it have to be a certain amount? No, it doesn't. But what I like to tell individuals that are starting out, start out low. If your paycheck only needs to be $500 a month until you can grow into more, that's okay. You just want to get into the habit of making sure that you understand that a paycheck requires an actual payroll, an actual physical check stub. It could be direct deposit, but part of your requirements are that you get a check stub with a payroll check. Let's talk about the compliance requirements behind a draw versus payroll. When you take a draw, you want to just track how much money was transferred from your business to yourself, the date and the amount. Keep a log of exactly how much money was transferred. That's all you need to do when you are taking a draw, and that information needs to be reported on your tax return for your LLC. When you are doing a salary, the requirements really jump up. You are now going to be considered an employer. You have to register with IRS and your state revenue department as an employer. That also means that you are responsible as the employer for withholding payroll taxes, federal income tax, state income tax, Social Security tax, and Medicare tax, and any additional state taxes that your state may require. As an example, the state of California requires that you withhold state disability insurance. In addition, as an employer, we also have to pay state unemployment tax. The federal government requires you to pay federal unemployment taxes. These are the taxes that we have to pay as an employer above and beyond what we give our employee, ourselves, the business owner, as a salary. So I want to make sure you understand that distinction. When you are paying a salary to somebody, whether it's hourly or whether it's the same amount, but it's coming on a paycheck, you as the employer have to pay employment taxes. You have to pay half of your employee's Social Security tax, half of your employee's Medicare tax, and you have to pay the state and federal employment taxes, which include unemployment, which includes state disability, depending on your state. You also, as the employer, are responsible for withholding out of your employee's paycheck whatever federal and state income tax is required based on how they fill out their W-4 form. You also have to withhold their Social Security tax and their Medicare tax. In addition to withholding, you have to pay that tax over to the Social Security Administration and or the state revenue department. So it gets a lot more complicated when you go on salary. You also are required to file payroll tax returns, which are different from income tax returns. Payroll tax returns are forms 941 that are filed every single quarter. I don't want to get into the weeds of payroll taxes, but I do want you to understand that when you level up to a salary, your compliance requirements level up. Whether you pay yourself $500 a year or $50,000 a year, your requirements are still the same. When you are deciding whether or not to be on a draw or to be on a salary, here are some things I want you to consider. Are you ready for the ultimate compliance requirements of payroll? Because payroll is not a joke. You are held responsible as the business owner, regardless of whether you are operating an LLC, an s-corp, or a c-corp. You're responsible for those taxes, and IRS can come after you personally. You're not indemnified from liability when you're operating as an LLC if you don't pay your payroll taxes. The other thing to consider is my business at a consistent profit where I feel comfortable paying myself $500, $1,000 every single month or every other month? Am I at that level yet where there's a level of comfort? I want you to be at a level of comfort. And I typically say a level of comfort should be you at a profit of about $50,000 per year. That's when you can start to think about going from a draw to putting yourself on payroll. Now you might be thinking, Karla, what are the advantages of going on payroll versus a draw? When you are a business owner and you are leveling your business up, when you're ready to start qualifying to purchase things yourself as an individual owner of that business, it's easier for banks and financial institutions to understand a W-2. When we start telling them about draws and net profit, their head explodes. Being on a W-2 has its advantages. Being on a W-2, you can set yourself up on a 401k plan. And there's other things that you can do when you're on a W-2 form. It could just make life a little bit easier for you financially. However, it is more costly to operate on a W-2 because you have to pay into Social Security, into Medicare, so that when you get older, you can have those benefits for yourself. If you decide you're sick and you need to draw on state disability insurance, the fact that you paid into it as a salaried employee can be a benefit for you. If you are a business owner and you decide you want to have children and you want to go out on maternity leave, now you have state disability insurance. If your business is not doing well and you need to now lay yourself off, you now can draw state unemployment. So there are definitely benefits to being on a salary, but it does not come without extra costs. That's why it's so important for you to be ready to level up and to make certain that you work with somebody that understands the filing requirements of being on payroll, because it is another level of growing your business. When you are documenting your payroll, it's so important to understand that you have to keep track of how much you pay your salaried employees. They got to get those pay stubs. Again, they have to file payroll tax returns, you as the employer. So there are different requirements once you get to that level. But at the end of the day, here's the good news. You are making profit in your LLC. You are now leveling up and you have a decision to make. If you're at $50,000 or above, let's talk about payroll. And now that you know better, you gotta go out and do better. You gotta like, comment, and subscribe, as well as share this video with a friend, because I am looking forward to you becoming the next millionaire and growing your business.